Welcome back with me, Steve Hand, and Lessons in Property. And today I've got Gemma Roberts with us from Together. Hi, Gemma.
Hello, hi, nice to see you again.
Nice to see you. So we do quite a lot with Together, and Together are a lender that lend in the short-term space as well as the longer-term space. And by that, I mean they cover bridging and development finance. They cover residential mortgages, buy-to-let mortgages. So there's a whole array of products, isn't there, that you cover?
Yeah, we have, as you say, Steve, a wide product set from regulated bridging, second charges, through to non-reg bridging, commercial term. And what's great about us is our flexible, common sense lending approach, the different client profiles, different property types that we can lend on. It's a really sort of wide product set.
Yeah, I remember having a case study a client a while back, and it was I think it was in the Shetland Islands, but it was one of the islands anyway off the coast of West Scotland, and I'd narrowed it down to two lenders, of which you were one of them that would do it. And because of when the property was made, it was just over 50 years and it was timber, that you guys were the only ones that would do it in the end. So I was really chuffed that, a lender that we support a lot, that we'd managed to find a home for the clients as well. And the rate wasn't too high either. You would think, being the only lender, that it would be astronomical, but it was still affordable.
Yeah, we do. Obviously, as you know, we lend in Scotland, and we do quite a lot of holiday lets in Scotland as well, which is quite a popular sort of location at the moment. We look at the inexperienced investors as well, and you tend to find with Together that it may be a couple of pieces on an application where it's a little bit out there, and we can look at sort of all those criteria points in one.
Yeah, because you've got the property itself, which is a challenge at times, and we deal with all sorts of stuff. So we get traditional, non-traditional construction, and sometimes it's properties that are above a commercial premises. The location might be a little bit, out of the norm. It's not necessarily in Glasgow or Edinburgh if it's in Scotland, so it can be quite rural. And all these factors really affect a lender's ability to lend, don't they?
Yeah.
The property itself can be a challenge, and then the client's circumstance can be challenging because, there might be a blip on the credit file, or there might be something, they might have just gone self-employed or not that long ago. So you're flexible with the income side of it on the client, if that's required, as well as the property being a bit challenging at times.
Yeah, so like you say, with client profile, we can look at expats, foreign nationals, clients with less than perfect credit history, and as you say, self-employed clients where you need to utilise projected income. We can look at all circumstances and client profiles.
Yeah, no, it's great that. And also, you've been going 50 years, not everyone knows this, but when I went to your offices the other week and I saw it's up there, isn't it, 50 years, and you've got all these employees that have been with the firm longer than 5, longer than 10, longer than 15 years. So it's quite impressive. And it's something that I like to get across to developers, that, who you get your funding from, especially in the short-term space, like in the bridging finance space. There's some players in that market that you wouldn't necessarily want to go with, and there's also ones out there where they don't have a big pot to fund projects with. And I get this across to developers because if they've only got a few £1,000,000 in their pot to lend, and some projects get delayed and you're expecting monies through, that could delay your ability to start your project. But with Together, it's a whole different ball game, because there's 700 or 800 employees.
Yeah. We've, as you say, we've been around for 50 years. We've seen lots of different economic cycles, so we're well sort of versed in that area. The people at Together really make the business. We have a very entrepreneurial flair, even though we are a large company. And like you say, stability and common sense lending is the core of what we can offer for clients.
Yeah, and you can see the passion flowing through. Just when I met Mark, your CEO, the other week, from Mark's been there, 35 years? Yeah. And his team under him as well. Really loyal, hard-working staff. And it filters down to the client experience. I'm glad that we do a lot of business together, and we support each other, and that'll only grow from here on in as we deal with more developers and more people are after, I guess, searching for higher yield or searching for non-standard buy-to-let type scenarios.
I think it's great as well we're doing this interview today, because on Friday we reduced rates on the bridging side of things, and like you say, for us as a lender, we can look at the inexperienced. We can lend from 26,000 up until your corporate entities of up to 12 mil.
That's a wide range, isn't it?
Yes.
It's a wide range, because you do get lenders that don't get out of bed, and it's fine. It's like, that's their market. They don't get out of bed for £1 million unless it's a £1 million loan or above in the development space. And in the bridging space, even if it's below 200k. Sometimes they're like, don't really want to deal with this, it's not worth our time. But you guys do heaps. And you'll do heaps that are several 100,000, but also 50,000, 30,000 loans.
And I think as well, we're very simple to deal with as a lender in terms of facilitating a bridge. We like to keep things simple. We try and utilise AVMs if we have a residential security, meaning there's no upfront fees for clients.
Yeah.
And we can offer dual rep as well, which is no lender legal fees if it's a purchase transaction.
I was going to mention that because some clients are very rate savvy, and understandably so, but it's not just about the interest rate. It's about, even if together are in one scenario 0.1 higher per month, the fact that you're saving on that valuation, you're not having to do a physical valuation at times, and also the dual representation of solicitors means that, and these are the hidden costs sometimes, aren't they? It's like those other fees involved with bridging, like add that up with the interest rate and now look at us.
Yeah. And I think, again, one of the main USPs of bridging is you want speed, and we deliver on speed. You know, we can get deals over the line very quickly. We do a lot of auction purchases, time-sensitive transactions, and we can fund those in really speedy timescales.
Yeah.
We also can fund deals internally as well. So if clients already own a property and the client wishes to capital raise and the property's owned in an individual name, we can fund these internally, which means we don't require any solicitors.
Okay.
So with a Gully package case, we can fund deals, you know, in a couple of days.
Yeah, and that's brilliant because that allows developers to negotiate hard on the price at times. If they can say, you know, confidently that they can complete inside 4 weeks and sometimes faster than that, and you've got a motivated seller that's really time sensitive, that really helps with the purchase price.
And we see a lot of those fast funding transactions because there's more distressed sales at the moment, isn't there, in the market, and more, you know, more time sensitive. Transactions.
Yeah, definitely. So I was going to ask you, so we know a little bit more about Gemma. I know that you train, you're into your bodybuilding and running and stuff like that. So how do you juggle it with having a daughter and a corporate career that takes, you know, quite a lot of your time up?
Yeah, I think you have to make time. As much as some people might not like to hear that, yeah, you have to make time. And, you know, whether that's training at 6 o'clock in the morning or 7 o'clock at night, you know, I just always try and squeeze it in somewhere, yeah. Because I think the benefits of training outweigh, you know, that extra hour in front of the TV or, you know, the extra hour in bed. I think consistency is really important with training. I think you're never going to always feel like you're motivated to train, so it's just important to as well be consistent.
And it's not just about, okay, if you're training for an hour or say it's an hour and a half by the time you've got ready and everything, that's an hour and a half less in front of your laptop, or you could be working more. But what about the quality of the work? Because I'm a big believer in this, that when you train you're more mentally alert. So the quality of your day, you're more productive throughout the working day. You know, you're not having a nod at 3 o'clock in the afternoon because you've sharpened your mind early on in the day. Yeah,
you're more energised, aren't you, and you're more uplifted.
Definitely. And don't forget to hydrate as well, because both Gemma and I have got 2 litre water bottles here, haven't we?
Have mine somewhere, yeah.
No, it's dead important that, because as much as I like a coffee or two, you know, you've got to balance it, haven't you, with the water?
Yeah, it's just not the best if you're travelling around in a BDM job, is it? But, having to hold it in, but yeah.
You know where all the service stations are near you.
Yeah, exactly, yeah.
Oh no, that's been great. Thanks, Gemma. And until next time, guys, see you soon.